I want to welcome in Jenny Horne, markets correspondent and co-host of NextGen, to take a closer look at some of the movers that we're paying attention to today. DoorDash on the move this morning off the back of its latest quarterly report card. Take us through some of the numbers first and then your takeaways, Jenny.
Yeah, Diane, and I'm happily surprised with this report because of the fact that we saw such a mixed picture and mixed guide from Uber, that there was, I think, a concern looming with all these names. Now, Lyft is a bit of a different story. They also reported yesterday after the close, but to focus on DoorDash here, user base exploded to 42 million monthly active users with order frequencies at all-time highs. Also, its grocery and retail verticals saw some pretty stellar growth, signaling that this is no longer the traditional, like, fast casual fast food type delivery service. It's really trying to be the one-stop shop delivery company that it's growing really and showing signs of actually becoming. So their customers were ordering from all categories. We saw their CFO say in their earnings call they are the fastest growing in the U.S. They've gained share through these new verticals this year. They highlighted the fact that their order frequency at all-time high indicates the strong user engagement and platform stickiness. And their CEO did say that now, when looking at subscriptions and looking at the future, they expect to have over 100 million customers who order with the brand annually with their Dash Pass, and as well as their Wolt Plus subscribers in the tens of millions. So all encouraging. Fourth quarter earnings per share were around 33 cents a share. That was pretty easily ahead of expectations. Revenue came in around $2.87 billion. Total orders rose to 685 million, up about 20% year over year. Marketplace GOV also increased 21%. And as far as now EBITDA, they do anticipate increasing in the first quarter through the second quarter, and again with the second quarter through the third. So they're continuing to see their outlook remain strong. I also think encouraging when you have management saying they are very excited and very confident in now their outlook for the full year, Diane.
It is interesting to see these numbers and to see essentially how sticky the habits have become for consumers, for households, for basically getting everything delivered. And you can see that DoorDash has been expanding there. And I know they've essentially been keeping up with Instacart this year in terms of stock performance and look set to break out beyond Instacart today. Anything else you're seeing in terms of analyst commentary or any headwinds for DoorDash, Jenny?
Well, encouraging that this name had already been on a pretty phenomenal run, and now today set to open, in a pretty strong place as we're trading at 207, roughly just below 208 a share. So that would put us at the well above, like basically $9 ahead of the highest level we've seen in the last 52 weeks. So this is hugely encouraging from just a price standpoint that we're seeing this pretty decent pop hang on. Obviously, we'll have to wait till CPI. I know that will shake the markets up here, but right now looking strong this morning, a name that has not really seen the same degree of downward pressure that like even Uber and Lyft have experienced as of late. So whatever they're doing is working. I'd say I don't agree with the stickiness because my loyalty is to Uber One. I do have a subscription to that. So I understand now finding this loyalty to your given subscription service and sort of sticking with it. But I will say my boyfriend's a DoorDash guy, so we split between the DoorDash and Uber Eats.
One gets one. So I am Uber One as well. And what's funny is I was like, oh, I need to cut subscriptions because usually at the beginning of the year I go through and I'm like, where should I make some cuts? So initially I had, well, put it this way, I paused it and then I was like, no.
Me too. Me too. I came back.
I did too. You're not alone. All right. In terms of DoorDash, let's bring it back to DoorDash. You got a couple analysts raising their price targets. Deutsche Bank boosting the price target to $246 a share, maintaining a buy rating. Mizuho maintaining outperform, raising their price target to $222 a share. So I imagine today we'll continue to see some analysts reset their price targets on this one. Stock indicating higher today, up 6% in the pre-market. Jenny Horne, thanks a ton for the breakdown. I guess we'll stick with Uber One and your boyfriend can take DoorDash.